For more, let's bring in CME trader Bob Iaccino.
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 Bob Iaccino. All we are with the stock market now, as much as it's important that we're approaching bear market territory with the S&P, we're in it with the Dow, is that we're where we were in February of last year. So as you look at the S&P 500 as itself, if you include dividends, returns about 8 to 9% a year, and then every 10 years has a 50 to 60% drawdown. I mean, if you're an investor, if you're a fund of funds, which I was, that's an investment. If you showed me that, I'd put it aside. The NASDAQ today got to the area that we were in December. Not 10 years ago, not 5 years ago, just in December.
Wow.
The 2-week sell-off we've seen is reversing a 10-week rally. That's not that unusual when it's put in context.
Don't always trade with crude oil. Sometimes crude oil has a rally going, and if you have an opinion on crude oil is what you should be trading.
I think we're looking at lower oil prices in the medium term. In the short term, though, they're going to hold in until we're done with this OPEC meeting. The interesting thing is that I maintain that even a production cut at this point, even of that magnitude, isn't going to prop up crude oil for any extended period of time, because as I've been saying for months, crude oil has to have a demand side move. There has to be more demand. We've got refinery utilization 86.9%. We haven't had refinery utilization up above 90 here in the U.S. for weeks now. Now, that's a demand side weakness prior to the effects of the coronavirus. The refinery utilization jump to me was significant, up above 97%. If that's sustained, that's essentially what we call full capacity. You don't often see 99 or 100% in refinery ute. And if it stays up at that level, that means the refineries are anticipating or actually already seeing an increase in demand, which is the one thing that everybody has been questioning. How's everybody doing? I am Bob Iaccino, another episode of the Market Think Tank. If you get a price action entry, you should also have a price action based stop. It shouldn't be based on a dollar amount, and that's what a lot of people don't know.
I'm still a Bitcoin bull. I'm still holding my original position, but it's not something I'm adding to right now because that is the risk. It's the stroke of a pen risk, and that can happen any day, and it can come without warning.
I've got product placement. Where should I put this? Can you guys see this? Yeah, I got to put it somewhere where you can see it. We're going to put it up here. There, that's perfect.